Hi and welcome to the Market Alert for Wednesday 27th of April 2022. So I've uploaded a quarterly report of all trades from February to the 19th of April, and you can find that in the members section of the website by clicking on tutorials. And if you go down to live view trading examples and then just scroll down, unfortunately I've done it, and I don't quite understand how to actually operate the uploading of these videos, but at the moment there's no one else to do it, so I've managed to get it on here. If you scroll down you will see it. It's not at the bottom where it should be, but the main thing is that it's actually in here, and I'll get it corrected and added to the bottom, but it's video 39 is the one that you're actually looking for. We'll just go down to here, and there you can see example 39, and you'll see the statistic graphic there. So if you scroll down to here, then you'll be able to watch this video on all of the statistics. This is a screenshot of the stats and the equity curve. So if you make your way down to there, you'll be able to have a look at all of this. Right. Let's move on and have a look at the news. Yesterday, this one snuck out. Nobody paid any attention to it, but the national debt interest payments rise to 70 billion per year. That's the interest on the debt, interest payments. Just let that sink in for a second. That is the equivalent of 200 million a day on an annual basis. So, yeah, it's hefty, isn't it? Or 1.3 billion per week. So there you go. That's also going on in the background. So 200 million a day interest payments on the UK debt. Inflation, FANG and airplanes, where the real world and finance collide. The pain is now being felt. The bottom line is large cap stocks remain more vulnerable than we think. Yesterday the market tanking in the afternoon. To hold or not to hold? That's the question, I suppose. Welcome to huge levels. News, core QS market wrap, stock plunged deeper on global growth woes, while Nasdaq 100 sees biggest decline since Feb 3rd. And what else have we got? Global military spending, along with interest on debt payments, is now up to 2 trillion, first time in history. As I said before, the Russia-Ukraine thing is just the start. And as Gerald Celente has said in the past, when everything else fails, they take you to war. And you're also seeing the US now funding more in the Ukraine as well. They can't help themselves. And talking of Russia, Poland confirms Russia to halt all gas delivery Wednesday if payment not settled in rubles. Again, that's going to send the energy sector moving back to the upside as well and create all sorts of disruptions. So nothing cheery around today, I'm afraid. News today, just the criminal is out at 5 p.m. The markets will have to make their own minds up today on the direction. The market bouncing at the moment following yesterday's move to the downside. Just before we look at that, gold-silver ratio continuing to move to the upside at 81 there. Down a bit overnight, but we'll discuss that in more detail. And silver yesterday, number of contracts traded to keep the market suppressed was 80,000. A lot of volume in this market at the moment, which you can see we had 3 days of 500 million of paper silver trying to move the market to the downside, which is held quite well as considering, but 80,000 yesterday as well. Personally, I still think it's going lower, and I'll discuss that when we look at the details. But let's start off with the Dow, if I can find it. So I'm in a different order this morning. Here we go. So we've got the Dow there. Yesterday, the market down significantly on fairly lowish volume, to be honest, down to 78% retracement in the daily and reversing overnight. But that's been a pattern, hasn't it, where we've seen the market wanting to reverse up and then it getting slammed again. So we'll see. But certainly this morning on the long side at this point, the German DAX up 100 points on the overnight as well. The 30-minute for yesterday, market opening at 2:30, already short beforehand. It was just a matter of getting through the DP, which the market did, and then continuing down. We had 2 green sideways bars, but then we took out the S1, and the market then continued, and only 1 green bar there before the market reversed once more. The momentum starting to shift to the upside here, and you can see there was a huge demand there at the close of the session. A retest here, nobody selling, the market's been brought back on the overnight. It's actually come back quite well, hasn't it? Let me just have a look from this low to the current, 362 points back already. In the German DAX, in the daily chart, this too trading down yesterday to the 78%, 89 area. Some selling there. The demand from the previous day did start to move the market back to the upside, but by the afternoon, when the Dow opened, the market was absolutely slammed to the downside. And you can see there the momentum shifting to the downside at the moment. In the 30-minute chart of the DAX yesterday, as I say, it was sideways, stuck in a range of 150 points. But as soon as the Dow opened, this too was also short beforehand. The market then moved lower. One green solitary bar and then a reversal off this, and the market being sent to the downside there. You can see the divergence there, and the final selling followed by a tiny bar, and the market then moving back. This has rallied. Let's just have a quick look at this. We're up 209 points off yesterday's or last night's low for the DAX there. And in the 5-minute chart, we can also see that we've got, if I can just find the 5-minute, there we go. So yesterday morning, the futures market moved higher initially, then sold off, and then came back, and then we had this selling down to the DP before the market moved higher, retraced, and then went back to the previous day's high, and held this range throughout the mid-morning until the Dow opened in the afternoon. We'd already got a bit of a move to the downside there. The market now, the averages all changing order and in the right direction, and then eventually giving way when the Dow opened. But a bit of a bounce here back to the DP level, and not fully back to an overbought situation, but then we reversed off the DP and down she went. So overnight, you'll see prices have managed to work their way back up at the moment above the close. And let's just have a look, see where we are in the bigger picture. We've got the 200 MA and DP here. These need to be taken out if the market's going to move to the upside. And in the daily chart, certainly we'd want to see the market heading back above these fibs. Although saying that, 38% sees the 5-bar moving average there, and the 62% is the high of yesterday, more or less, and the 20-bar moving average as well. Be a big reversal off this if the market does move back. Let's just have a look at the bar. So yesterday was 638 points in this range, so it's got a lot to come back to these fib areas here. And then into the pound and yen, the currencies getting hammered yesterday. You can see that the GBP JPY trading down to 89% of this retracement, down to the 50-bar moving average as well, finding support overnight. You can see this getting crushed yesterday, overbought in the morning, crossover, and the change in trend there at the DP, creating a resistance, and the market just moving all the way to the downside. Overnight, prices have managed to find a bit of support at yesterday's low and are now moving back towards the upside again. You've got this 50 EMA and also the DP level there that needs to be taken out, but at the moment we're seeing a bit of a drop off in momentum there. And speaking of momentum, look at this on the pound to the downside, all the way down to 126. Is it 126 or 125 there? 125.948. We look at this in more detail in the 30-minute. Yeah, we're down to the low here is you can see there 125.96 for the pound there. So really getting hammered on the downside. Same as the yen. And you can see once we broke through the DP yesterday, it stayed red all the way down for the session. If the daily charts, you can't see a lot, but the monthly chart, we can see that we're heading for 62% retracement. As I showed you yesterday, the low The recent low for the pound is back in 2019 when we saw a low of the 114, wasn't it? That's right, 114 area. So if we take out the 89 in this market, it's about a fair way to go. Then that's what you're looking at on the downside there. And then finally, let's have a look at the metals. Finally, in the metals, starting off with silver, we can see that the market held yesterday at the 25.50 area and is still doing overnight. But for me, I still think we're heading down to 21.97 area, if not lower. And I'll show you why, because the dollar continues to move to the upside at the moment, and you can see they're heading for 102. Yesterday I was surprised by how well it did hold at 23.50, but given the opportunity they will move the market to the downside. So as we get towards the 103 in the dollar, then we can expect this to be moved to the downside again. You can see exactly yesterday afternoon, even after the news, the market moved lower. Got a bit of bounce last night, but it's now starting to do this, and for me it's still going on the downside. And if you just squeeze this up, certainly this is going to be a target, $22. So we've got another $1.50 yet to go, despite the fact that we're currently oversold on the downside. The talk of global contraction and growth, etc., etc., is all they need to move the price down, along with the dollar index going through the major levels and up to that 103. And if we go through 103, which will make it a triple top area, then we can expect more downside pressure in the metals, including gold. Yesterday it was quite sideways and quiet, but at the moment, again, you can see still sideways there and finding support just at that 1900. It's just below $1,900. And again, I think this is going lower too. They've got no choice but to slam the price and keep people's attention away from the only asset that really is in times gone by was a great hedge against inflation, but now they can control it with the paper market, as we've seen over the last few days. Once you can control the market by slamming prices with paper derivatives, then it makes it very difficult for these markets to move to the upside, despite the fact that the physical market is showing shortages and the gold-silver ratio coming out of the ground with silver is 7-1. So you can see that the manipulation is blatant. And yeah, that's about it really. Crude oil sideways to higher. I'd be interested to see what happens with this, with Poland refusing to pay in rubles for the gas, and whatever it's going to affect the energy sector, it's going to also create more inflation. And bad news for Europe, to say the least. Okay, that will do it for this one. Let's see what happens today. Do check out the video that I mentioned at the start. And with that, have a great day. As ever, thanks for watching. See you in the next one.